right, welcome back to the Traders Network. I'm Michael Yorba, your host, broadcasting to you live from Deep Ellum on Air in the Dallas Metroplex area, the hottest, newest place in the United States for the new economy about to hit the world. All right, I'm so happy to be right in the middle of the financial side of this with breakthrough content, breakthrough information, breakthrough companies. And now we're going to put a face on some of this stuff that's been under covers for a long time. Tim Bost, editor of Financial Cycles Weekly. This man uses, hey, am I telling it right, Tim, or what?
Oh, you're telling it absolutely right, Michael. Thank you so much.
I mean, when we got this thing started, it felt like the French underground, and now everybody seemed to like the way it sounded and looked. It's like you couldn't possibly be lying to us. You guys are paying for this stuff yourself. So anyway.
Well, this is, we do our best here. Here at FinancialCyclesWeekly.com, what we do, Michael, is we track the movements of the planets and the predictable cycles that they go through and coordinate those with the rhythms of the markets. And it's a fairly straightforward proposition. We can back test and see what's happened before in the markets. Of course, we've got the historical market data. We compare that to the planetary configurations and then draw conclusions accordingly.
All right. Well, what do you have for us today? I know you've been telling us that we're going to get a move in the stock market. Sure enough, today you want to talk about gold. You brought some charts. I want to see those.
Well, we've been talking about July being a bearish month for the markets based on the astrological configurations, and we did a lot of work looking at how to time the market top on that basis. Today we're talking about Mercury cycles. We put out this book about 18 months ago, Mercury, Money, and the Markets, and with this information we've included some charts and some data going forward about 40 years, up into 2050, in fact, to try to forecast specific turning points in the gold market. And this has been very interesting because we have something that we call the Emerald Tablet trading strategy, and the book explains what that's all about. But essentially what we're doing with that trading strategy, Michael, is looking at the cycles of Mercury and the Sun. And every once in a while, these two planets, or the Mercury, will align with the Sun in what we call a conjunction. They're at the same part of the zodiac. And we have the inferior conjunction when Mercury is retrograde, and the superior conjunction when Mercury is in direct motion. And so we simply look at the price of gold when those events occur, and it gives us a specific trading strategy. We have an example of this. It happened earlier in the year between February and April of this year. And with that chart, what we see was the chart shows the event of Mercury's inferior conjunction coming on the 15th of February. The actual price bar there is for the 14th. This celestial event occurred on the Saturday, so the trading day right prior to that was when what we were tracking with this. And what we do then is note the trading range on an intraday basis for Mercury on that date of the inferior conjunction with the Sun. And what we've discovered is that the price tends to go back to that same trading range when there is a superior conjunction a couple of months later. Now, what we're after here, of course, is a good price excursion outside of that trading range. It can be, in some cases, to the upside, in some cases to the downside, but we try to time our trades then when we get that maximum excursion away from that trading range that was set at the inferior conjunction in anticipation of the price returning to the same range. Now, sometimes we'll get an overlap here. We're not looking for the same price to the penny, obviously, but to get back to that same zone. So in February of 2014, we had a trading range between $12.99 and $13.21 on that day, on the 14th of February. And as you can see from the chart, we had a nice excursion to the upside. Then it swung back down below that trading range and crossed over it a couple of times just prior to the superior conjunction, it was actually trading below that and then popped right back up into that same trading range on the 25th of April. And in fact closed that day at 1303. So this is the kind of example that we look at. We have a number of examples in the book from previous years, but it's interesting to see this continue to hold. And then what we've got going on right now is another one of these guys. This phenomenon started again with an inferior conjunction between Mercury and the Sun back on the 19th of June. Now, that was a very interesting trading, Michael, on the 19th of June, because it was a very big price bar, a huge intraday range that day. We don't always see this with the inferior or superior conjunction of Mercury and the Sun, but in this particular case, it gave us a very broad trading range, which makes it a little bit more difficult to trade this time around, simply because we've seen so much of the price action since then. Even though gold has been trending down lately, it's still well within this same trading range. That price range runs from 1276.20 to 1317.40. And so what we're looking for here is a week from tomorrow on the 8th of August. The Mercury will have that superior conjunction with the Sun. This is the date to be closing out a trade, but at this point we're not in an active trade on this basis. If we get a good price swing on either side of that trading range, and what I'm suspecting is that we may see a bit more of a pullback in gold as we move into the coming trading week. It may be a short-term trade, a setup of just a couple of days. If we get substantially below that 1276 mark with gold, then we'd be looking for gold to pop back up to that price range above 1276 at the end of next week on the 8th of August.
All right. Good information. All right. What are the other cyclical events that you see coming up that people need to know about, and what markets do they influence the most?
Well, we continue to have various dynamics impacting the markets, Michael. And one of the things that's been very interesting here as we've been closing out the month of July and looking at a turning point there was seeing the impact of the solar eclipse that occurred back in April on the markets in July. And this actually helped set price resistance for the S&P in a very unusual way. One of the things that we do, of course, is coordinate price levels with the markets. The planetary positions give us ideas about the price ranges we can expect, with the various planets. So we've been watching that resistance zone established by the eclipse in April. This was very important because this current week here back on Monday, in fact, we had the eclipse midpoint occurring. And this was the zodiacal midpoint of the eclipse that occurred in April and the eclipse that we got coming up toward the end of October of this year. And so we watch these configurations in terms of the geometry, the midpoint structure, the mathematical relationships, as well as the planetary alignments. And by combining all these factors, this is how we get into our market forecasts.
What markets are going to be affected by this?
Well, we're looking for continuing bearishness with some congestion in the S&P. Of course, we're continuing to watch the metals closely, and we work across the spectrum with the broad markets, but a lot of the work that we do here is looking at individual equities, and on a week-to-week basis, we select those equities that have the strongest impact from the planetary dynamics, and then base our model portfolio on those stock selections, and we're typically in trades there. It's a swing trading strategy, so we're in positions about 7 or 8 trading days, and are typically able to scalp off significant profits based on the shorter-term price swings. We'll be covering a lot of this information this evening, Michael, in a webinar that we have for our Gold Plus Elite members here at Financial Cycles Weekly. We do a monthly webinar just before the beginning of each calendar month, and we detail our forecasts with a great deal of information there. And for tonight's event, we're going to open it up to any viewers here at Yorba TV. We'll put a link up on the social media page for if you'd like to join us. You can be our guest this evening. You need to register to attend, but there's no fee for that, and you'll kind of get a peek behind the scenes at what we do with some of our members and how this whole strategy works on a more detailed basis.
What's the web address?
We posted that. It's kind of a long URL for that, and it is on the social media page already. If people want to go to financialcyclesweekly.com, they can sign up there for the free Astro Traders Tip of the Week. If you do so today, then I'll get an email out to you immediately with the link to that webinar as well. The
Emerald Tablet blog that you put up?
Yeah, the Emerald Tablet blog post is on my blog. We'll have a link there to the webinar as well.
That's what I'm asking. Okay, that sounds good. All right, Tim, we've got about three minutes. Let me ask you some questions for me, things that come up on my radar. Mm-hmm. There's been people come onto the show that saying that, look, this is a bigger distribution period on the stock market indexes, and what we're really looking at is the potential for a 2-year bear market. Well, since then, we've gone to new highs and new highs and new highs. Now that we've broken through some of these fairly decent support levels, do you have a larger cycle out there in your work that agrees with that scenario?
For a 2-year bear market?
Yes.
I am looking for a longer-term bottom coming up in a couple of years, so that would indicate bearishness between now and then.
Well, what I'm trying to bring out is if people can actually get a handle on timing and timing of these, whether it's a stock, it's an index, it's a commodity, and they're able to do what they did not get to do in 2008, we're a lot further ahead, and we're helping a lot more people by being able to bring this stuff out. We were first to come out with the credit default swaps news information before the 2008 hit too. So funny as it is, right. Timing is everything. We're back on the air, and here we are facing something that could be there. But isn't it a little bit easier using cyclical analysis through predictive processes like astrology to help with the filtering system on a technical forecasting basis?
Absolutely, because what we're doing here is looking at cycles that are not necessarily price related in terms of reaching our conclusions. When we do regular technical analysis, we're looking at price history, and we're basing our conclusions on the patterns of that price history and the tendency for that to repeat itself. And that's certainly quite valid. But what we do when we add the planetary factors is it gives us a correlated dynamic there that is non-causal. It's a separate angle on the whole dynamic. And so it becomes a huge confirming factor for us when we have these planetary dynamics and the planetary cycles whenever they coordinate with what we're seeing with our conventional technical analysis. And so we can look at retracement patterns, we can look at Elliott wave, we can establish the Fibonacci zones where we expect retracements to take us, do all of that technical work, and then overlay the planetary work on top of that and get a level of confirmation that other traders simply don't have. It gives us much more confidence in entering our positions and a real timing advantage with the market. So that's what we're all about here.
Good. Well, before you go, one last time, we've got to close the show for now. Contact information for you so people can get into the webinar tonight.
Yeah, financialcyclesweekly.com. You can go to fcweekly.com, and that'll take you there. Sign up on that page for the Astro Traders Tip of the Week. We'll be sending out an email to everyone who's on that list within the next couple of hours with a link to the webinar. It's a free webinar, and we'll explore a lot of the things that we've got going on right now. In addition to a complete forecast for the month of August, we're looking at the commodities and futures markets as well as the equities market this evening as well.
Great. Thanks, Tim.
Thank you, Michael.
My pleasure. All right, Tim Bost, editor, Financial Cycles Weekly. I want to thank everybody for showing up to the show. We've got a lot of new members that have shown up recently. Our new media partners, Bar Chart, first time on the show today. We're going to bring a lot more new media partners onto the show with us, and a lot of new faces. You're going to see a lot of new faces show up here that have proven themselves to be top in their field, and normal broadcasts won't touch them, but we'll bring them in and bring them straight to you. If there's anybody out there doing you good, bring them to me. We'll put them on the show. We'll talk to them. We'll do everything we can to vet these people, make sure that they are of the highest caliber of performance, integrity, and truth before we get them on the show. So thanks so much. Join up on our social network, yorbamedia.com, so you can have access to all of these people. That's what they're there for. Talk to you soon. See you tomorrow, 3 o'clock.
Thanks for listening to today's program. The Traders Network is a production of Yorba.tv LLC and is streamed live and archived at yorbamedia.com. We invite you to listen live, join in the conversation real time, and link to the Traders Network on the Yorba Media website. All opinions in this show are that of the presenters or their guests, and not of this station's owners or management. These opinions are for educational purposes only and should not be interpreted as investment or financial advice. All investments involve risk, and past performance is not indicative of future results. Tune into the Traders Network every Monday through Friday afternoon from 2 to 3 p.m. here on 1190 a.m.